Home values in 20 U.S. metropolitan areas fell less than forecast in the year ending in July. In the wake of disappointing housing numbers last week, could this be a sign the housing slump is really turning around? For some analysis, we turn to Bloomberg's economics editor, Michael McKee. Michael, what's going on?
Well, you don't normally think of a 13.3% decline in anything as good news, but in this case, you go back to January, we were talking about 19% declines in the Case-Shiller index every month. So this is an improvement, and it's the sixth straight month that the rate of decline has improved. We also had 16 cities that had a better than 1% increase in prices during the last month. So overall, or the month we're talking about, which is July. So overall, the trend is definitely better.
Well, Case-Shiller was a fairly strong report, even though it was down 13.3%. It raises the question, how broad is the improvement?
The improvement is very broad. 18 of the cities only had improvement. Only Las Vegas and Seattle saw prices drop in the last month. So after months and months and months, 2 years really, of prices falling, we're finally seeing prices start to rise in a lot of cities.
What's this mean for the economy overall?
Well, it should mean a little bit better mood for people, and it should mean that maybe we can start to see more home sales. At this point, prices are still way below where they were at the peak, so we aren't going to expect a lot of extra spending out of that. People still don't have that ATM in their backyard.
So you know, a lot of viewers and listeners want to know what city's doing the best, what city's doing the worst.
If I asked you, I bet you couldn't guess.
Best, is it in the West or in the East?
It's in the Midwest. Of all places, Cleveland is doing the best.
Wow.
For the last, the month that we had, that we just had a rating for, which was July, Cleveland was down only 1.3% from a year earlier. They were up 1.5% in price from the month before in June. They never had the real estate bubble,
right,
so they didn't fall as far. So the problem is not as bad.
The worst, Las Vegas?
Las Vegas is definitely the worst, down more than 31% over the last year and still falling.
Mike, let me ask you, why is Vegas getting hammered so much? What's been going on there?
Overbuilding, too much capacity. At this point, there's just not enough people moving into the state to absorb all the new houses. Prices keep falling because it doesn't cost anything to build one when there's a bunch of empty ones.
Our economics editor, Michael McKee, joining us, taking a look at Case-Shiller. Michael, thank you. Now, for more on that home price report, I'm joined by David Blitzer. David is a managing director at Standard & Poor's, which is a co-producer of the S&P Case-Shiller home price report. Welcome to Bloomberg News.
Thank you.
Sir, you just heard our Michael McKee, our economics editor, talking about these findings. Why don't we parse this a little bit? What did your report tell you?
Well, I think Michael's comments are generally in the right direction. The report is, by and large, very good news. It comes on a string of good news. And I think one has to be exceedingly careful at this point. It'd be easy to get carried away and say, this is it, it's all over and done with. But there are enough things out there on the horizon that I definitely would not draw that conclusion. Looking forward, this is good news. The direction right now is definitely up, but there could be a number of bumps in the road, and I would caution anybody before they run out, decide that the housing bust is about to be replaced by a housing boom.
Right.
The housing bust doesn't look quite as bad as it did a few months ago.
Mr. Blitzer, is this a case of half empty versus half full? What are we looking at here? Should we focus on this biggest month-to-month gain in 4 years or the smallest decline versus a year ago?
Well, first of all, because the headline data are not seasonally adjusted, you should either focus on the year-over-year numbers to a large extent, or you should look at the seasonally adjusted numbers, which we also publish. Second, looking forward, I think we have to try and anticipate some of the issues that housing will be confronting. Foreclosures are definitely one of them. Foreclosures are not over and done with yet. We know that foreclosed homes tend to depress prices, and that clearly, because it's part of the market, will mean somewhat lower prices in the market. We know the government has the first-time home buyer incentive program out, which will run through the end of November. Unfortunately, it doesn't seem like anybody has really solid data on this at this point to tell us what the impact is.
Mr. Blitzer, you talk about that home buyer tax credit. What happens after November?
Well, the concern is that sales that without that credit would have taken place in December or January and February will be brought forward into November, and then comes December, January, and February, there won't be that many buyers left.
Right.
It's difficult to tell how much that will happen. Buying a home is more difficult, more time-consuming than buying a car. We know from cash for clunkers that people can react very quickly to automotive incentives.
What's needed to sustain this upturn?
The biggest factor that's needed to sustain the upturn is a stronger economy, without a doubt. And housing and the economy will feed each other going up, just unfortunately as they starved each other on the way down. That is really the number one factor. Number two is let's hope the Fed doesn't jack interest rates up in a big hurry. I don't think they will, but that would definitely put a solid damper on housing.
Right.
If it did. Number three is probably a little bit of luck.
Mr. Blitzer, if I might, let me go back to that homebuyer tax credit, because there was something I wanted to ask you. A comment from Chip Case, as you know, was one of the co-creators of this index. He said the federal government shouldn't extend that first-time homebuyer tax credit when it expires at the end of November because the housing market has improved enough. Do you agree with that assessment?
Well, I would certainly agree the housing market is definitely improved, and you know, the odds are not overwhelming. It would continue to improve. Second, I think mostly what that credit does here on out is move sales back and forth between October, November, December, January, and maybe February. It doesn't really create new sales. So
right.
I would certainly be hesitant about extending it, but you know, this is both policy and politics, so I think one treads lightly.
Mr. Blitzer, we have about 20 seconds. Any chance these numbers could reverse themselves?
Of course. There's always a chance the numbers go the wrong way, and we learned that the hard way in the last couple of years.
David Blitzer, Managing Director at Standard & Poor's, talking about the S&P Case-Shiller Home Price Index. Sir, thank you very much.
Thank you. Have a good afternoon.